All right, let's talk about the Indian market, because today was, well, it was a bit of a puzzle. We saw some incredible highs and some pretty startling lows, all at the same time. So what's the story here? Let's dive in and figure it out.
Yeah, so that's the big question, right? How can a market be winning and losing on the very same day? I mean, it sounds impossible. You see big green numbers, but then you also hear alarms going off about a record low. It's a total contradiction, but believe me, that's exactly what went down.
So here are the two sides of the coin. On one hand, you've got the big stock indices, the Sensex and the Nifty, just roaring back to life. They finally broke a nasty losing streak. But then, on the other hand, the Indian rupee, well, it sank. It hit a record low against the US dollar. You've got two huge headlines, and they're pointing in completely opposite directions.
Okay, let's start with the good news first. Let's decode this rally. I mean, the market's been down for a few days, so what was the fuel in the tank today that caused this big turnaround? And this was a big deal. The market finally snapped its 4-day losing streak. The Sensex jumped 158 points to close at 85,265, and the Nifty was up 48 points, hitting 26,033. It was a sharp reversal, and honestly, a very welcome sign that investor sentiment might be shifting. So, who do we have to thank for this? What was the engine behind the gains? Well, today's hero was, hands down, India's powerhouse IT sector. Seriously, these stocks pretty much put the entire market on their back and just carried it into the green. And you can really see just how much heavy lifting they did here. The broader Nifty 50 index, it was up, but just a little, about 0.18%. But the Nifty IT index, whoa, it surged by 1.4%. That's a massive difference. And you know, there's a fascinating reason for this, and it actually ties back to that weak rupee we mentioned. When the rupee is weaker, it makes Indian IT services cheaper for clients overseas, which is a huge boost for giants like TCS and Infosys. But it wasn't just the IT sector having a good day. There was some bigger, positive economic news in the air too. Fitch Ratings actually upgraded its forecast for India's GDP growth. They're now projecting 7.4% for the 26 fiscal year, and that kind of news definitely helps boost overall investor confidence. Okay, so that's the green side of the story. Now let's flip over to the other side of this puzzle. Because while the stock market was popping champagne, the Indian rupee was telling a completely different tale. And at first glance, it's a pretty worrying one. Yeah, 90.42. That was the number on everyone's lips today. The rupee hit an all-time record low against the US dollar. And look, usually when you see a number like that, it spells trouble. But is it always bad news? And this is where things get really interesting. The paradox. Because you'd expect panic, right? But some analysts were actually pretty calm. They were pointing out that, counterintuitively, a weaker rupee can act like a giant for sale sign, a buy signal for global investors. Now don't get me wrong. There are risks. A weak currency for too long can stir up inflation, but in the short term, it creates a really unique opportunity. So how does that even work? Well, it's a pretty simple 3-step process. First, the rupee's value drops. Step 2, for anyone holding US dollars, Indian assets, we're talking stocks, bonds, you name it, suddenly get a whole lot cheaper. And that leads to step 3. That discount attracts a flood of foreign money, which pours into the market and, you guessed it, helps push stock prices higher. And look, this isn't just some textbook theory. It's actually happening right now. The proof is in the numbers. Foreign investors have already poured $752 million into the Indian market, just this quarter alone. So yeah, that whole cheater assets idea, it's definitely got legs. Okay, so foreign investors are buying up existing stocks, but that's not the only thing pulling money into the market. There's another huge force at play here, building a ton of excitement, and that is the giant rush of new companies going public, the IPOs.
And leading that charge is the big one, the one everyone is talking about. We're hearing rumors that the upcoming Jio IPO could be valued at a staggering $170 billion. I mean, a number that massive? It doesn't just get attention in India, it gets the attention of the entire global investment world.
Just to put that into perspective for you, this isn't just another big IPO. An offering of $170 billion would completely shatter all previous records. We could be looking at the single biggest IPO in the history of the Indian market, ever. And Jio isn't a one-off. It's part of a much bigger trend. There's a whole pipeline of IPOs creating a frenzy. You've got Wakefit and Corona opening on December 8th. The Meesho IPO is already 3 times oversubscribed just on day 2. The excitement is so high that people are expecting listing day gains of anywhere from 18 to 31%. It's a hot market for new companies right now.
All right, so we've looked at the big picture, the indices, the currency, the IPOs. Now let's zoom in a bit and see what this all meant for individual companies. Because on a day like today, you're gonna have some really big winners and some really big losers. And you can really see the split personality of the market right here. Look at a company like Emmvee Photovoltaics. Their sales are up 181%, and profits have just exploded by 577%. Or Sattva, with sales growth of 980%. But then you look at a company like VIP Industries, where sales are down 25% and they're facing a loss. It's like 2 different economies are operating at the same time.
And it was really company-specific news that was moving the needle today. You had winners like Servotech Power, which jumped 9% after announcing new orders, and Colicore Gadgets got a boost with a new TV launch. But on the flip side, Biocon dropped 6% over worries about share dilution, and IndiGo took a hit after canceling over 200 flights, which, as you can imagine, caused a ton of headaches for travelers.
Okay, so what a day. Conflicting signals, big moves up and down. So the big question is, where do we go from here? Let's try to tie all these threads together and see what's coming up next.
Well, the very next big thing is literally just around the corner. On December 5th, all eyes are going to be glued to the Reserve Bank of India. They're having their policy meeting, and their decision on interest rates is going to be the next huge catalyst for the market, for sure.
So when you map it all out, you can see the story unfolding. Today, you had the market rally fighting against that record rupee low. Tomorrow, we get that massive RBI policy decision. Just after that, we've got the big IPOs launching. And if you look even further ahead, some analysts are already putting out predictions for CY26, talking about a potential 11% return for the Nifty.
So here's the bottom line. Today's puzzle, this whole mess of mixed signals, it wasn't just random chaos. The stock rally, the weak rupee, the IPO frenzy, all of it is interconnected. It's all building up tension and setting the stage for whatever the market's next big move is going to be.
And that leaves us with one last question to chew on. With the RBI's decision looming and all this action in the market, is this volatility a sign of major risk you should run from? Or is this the exact moment that creates the perfect opportunity?